Forbes claims that Tesla stock is going to hit $50 in 2023. It's going to collapse. It's going to crash. It's going to be worth peanuts on the dollar. That's what they're saying. They claim they have 4 compelling reasons why this will happen. Let's have a look at those reasons and see if there's any real truth behind them and whether or not you should just dump your Tesla stock now at a loss because it's going to crash even further. Hello, my friends. Welcome to the channel. I'm the Electric Viking. My name's Sam Evans, coming to you from Melbourne in Australia. Back home in Melbourne. Just was up in Newcastle for a week, a bit more. We went on a road trip. Boys and I did lots of BMX riding, had a lot of fun. Now, Happy New Year. Hope you had an amazing 2022. This year, it's going to be an amazing year for electric stocks, for electric cars, for renewable energy, and just for having the world move away from fossil fuels. This will continue to happen. It's going to ramp even faster. 2023 is going to be the best year ever, but Forbes says I'm wrong. Forbes says this is a lie. Forbes says that, I'm just making this up as I go along, and actually Tesla stock is going to collapse. EV demand will probably, I don't know. Let's have a look. A charismatic CEO is a double-edged sword. When investors perceive that CEO as a heroic leader of disruptive innovation, the stock's upside is unstoppable. However, when that CEO violates the social norms on which his or her business success depends, investors will suffer tremendously. This comes to mind in considering shares of Tesla, a mere 2.72% of whose float is sold short, which ended 2022 a whopping 70% below its November 2021 high. Its CEO Elon Musk appealed greatly to Tesla customers who wanted to show off their wealth while appearing woke. I'm not sure what they mean there, but anyhow, that's what Forbes says. Since mid-April 2022, when Musk announced his deal to acquire Twitter, Tesla shares lost 62% of their value, with much of that decline coming after he displayed his true colors by welcoming the anti-woke crowd back to his social network. After years of bad results, the plunge in tech stocks that began in November 2021 and Musk's distraction with Twitter finally rewarded those who bet against Tesla stock. According to the Wall Street Journal, those traders enjoyed $17 billion in gains last year. But the party isn't over. Forbes sees 4 reasons why Tesla stock will fall further in 2023, even collapse. The first of those reasons, CEO Elon Musk's Twitter is platforming hate speech and turning off Tesla customers. Now, is the platform of Twitter actually promoting hate speech? Well, people who want to believe that will do so. Let's just put it that way. The second of Forbes' claims, EV customers are buying from Tesla's rivals. Okay. The third, Tesla is offering large discounts to boost unit sales. The fourth, Tesla stock is way overvalued. There you go. Forbes claims Tesla stock is still way overvalued. Now, interestingly, if you perceive Tesla as a car stock only, yes, I would agree. It's massively overvalued. I hold the shares. That would be true though. If you perceive Tesla as a tech stock, in comparison to someone like Amazon, it's way undervalued. So it depends on how you perceive the company. Musk's Twitter distraction is turning off Tesla customers, say Forbes. If there is one thing we've learned since November 2016, it is that human irrationality can overpower logic. For example, a charismatic leader can compel people to do things that make no economic sense. Elon Musk has clearly turned the power of systematic irrationality on himself. Otherwise, how can we understand why the world's formerly wealthiest human being would spend $44 billion on a money-losing messaging system and then set about destroying it by firing half its employees, turning it into a platform for hate speech, and driving away advertisers? Now, personally, I don't believe that's true. In fact, I've had a look at the data, and it appears as though the amount of hate speech on Twitter has actually gone down. It appears to me as though, for some reason, somehow, the IT staff involved at Twitter have actually done a pretty good job of decreasing the amount of hate speech. I think this is like Forbes creating a narrative here, creating a story. And if you want to believe that story, you'll buy right into it. That'll be confirmation bias. You'll eat that up and you'll feel so great that Forbes is actually agreeing with your worldview. Now, if you want to believe statistics, you'll probably think otherwise. But anyway, each to their own. To be sure, Musk's charisma helped to propel Tesla demand for Tesla vehicles, and his use of Twitter to project himself on society saved Tesla a considerable amount of marketing spend. Now, as of today, the 2nd of January, 2023, there is no electric cars available in the world, well, other than in China, of brands you've never heard of. Outside of those unknown brands in China that you don't know about, there are no electric vehicles from 2021 on sale today. Now, there's none in stock. So is Forbes correct in saying that the only reason Tesla vehicles sold is because of Tesla's charismatic leader? Well, I would suggest that if there is no car brands, General Motors doesn't have any, Audi doesn't have any, Volkswagen doesn't have any, Mercedes doesn't have any, BMW doesn't have any, Ford doesn't have any, nobody has any stock from 2021. Everything's sold. Everything is sold. In fact, up until about the first 4 or 5 months of 2022, no manufacturer has any stock from that period onwards. That would suggest the sales are directly tied not to the charisma of Elon Musk, but to the reality, which is this. We have a world where we don't have enough EVs, customers want EVs, demand continues to increase. Therefore, if you make an EV, it might not sell immediately, but it will sell within at least a few months. In other words, we're not constrained by the charisma of a leader, we're constrained by a market which cannot make enough of a product that market wants. Forbes doesn't like reality. They're trying to tell you the only reason Tesla vehicles sold is because of a formerly charismatic leader who now people no longer like, therefore they're not buying the car anymore. That doesn't appear to actually be factually true. However, Forbes goes on to say, for example, in 2021, Tesla's marketing expense per vehicle sold was $0, compared to $468 for Ford, according to Visual Capitalist. However, the conduct that Musk, who has sold $39 billion worth of Tesla shares since November 2021, displayed between April 2022, when he signed a merger contract to acquire Twitter, and today is clearly turning off people who own Teslas. Now, I think it's worth pointing out, Musk did try to get out of this. He tried pretty hard to get out of this agreement to buy Twitter. I think he realized that it was a mistake, or he clearly realized it was a mistake and tried to renege on the deal, tried to come up with a reason why he should not have to go through with his purchase. Seemed like a pretty good reason, saying that he realized that a lot of Twitter's actual so-called users were fake, were bots, and that Twitter knew that was the case when they agreed to the deal, which I think was probably true. But regardless, he didn't win, and he was essentially forced to buy the company. A case in point, though, says Forbes is John Blumenthal, who bought a Tesla to help the environment and now wishes he didn't own it. Okay, that's an interesting anecdotal case here. According to the Los Angeles Times, Blumenthal's friends convinced him to dump his gas guzzler for a Tesla to cut his carbon footprint. After he learned how to drive it, he became a happy Tesla owner. Then in November, Musk turned Twitter into a platform for hate speech, which made him embarrassed to drive a Tesla. Is that really true? Or is that the media telling John that's what happened, so therefore he believes the media and is going along with it? Will people see me as a symbol of right-wing environmentalism? A living oxymoron. Now that Musk has apparently swung to the far right, banning journalists from Twitter while reinstating neo-Nazis. I'm horrified to be associated with his brand whenever I drive anywhere. Is Twitter really bringing neo-Nazis to the platform? And is it really a platform for the far right? Well, you're going to interpret that however you want, but I don't think there's a lot of truth behind those statements. Forbes wants you to believe so. What are Forbes saying this? What are the reasons? What's their narrative? Well, I've got to ask you a question. How do you think Forbes exists? Who do you think pays for their marketing? Is it Tesla's competition? Is it oil and gas? I'd suggest having a look at their books. You'll probably find the truth behind what Forbes is up to here, why they're going after Tesla so strongly. However, they go on saying that Blumenthal is not the only columnist to point out the negative side effects of Musk's tenure as Twitter's chief twit. Paul Krugman attributes the exceptionally steep plunge in Tesla stock to Musk's purchase of Twitter and the reputational self-immolation that followed. Apparently, that's what the New York Times had to say. Krugman, who said he would not trust Musk to feed his cat based on his conduct, argued that Tesla's sales have surely depended at least in part on the perception that Musk himself is a cool guy, who aside from MAGA types, who probably wouldn't have bought Teslas anyway, sees him that way now. Now, personally, I'm pretty sure there's actually a lot of MAGA types that actually do own Teslas. Maybe not a lot, but there's a few. Not saying I support MAGA guys, not at all. I just don't support the false narrative coming from Forbes. They continue. Now that Twitter is a private company, there is no reliable source of information about the company's cash burn rate. One key question that should concern Tesla investors will must need to come up with more cash, possibly by dumping Tesla shares, to pay interest on the $12.5 billion in debt he assumed to buy his $44 billion bauble. Now, obviously Musk didn't buy all of it. Forbes would like you to believe that's the case. $44 billion all came from Elon Musk. Well, obviously it did not. There's a series of different investors who purchased Twitter. Musk is just one of a number of different investors. He doesn't have to come up with $44 billion. That, my friends, is fake news. EV customers are buying from rivals, says Forbes. Krugman went on to point out that Tesla does not benefit from network effects that lock customers into buying from iconic technology companies such as Microsoft or Apple. Tesla's lack of network effects means that nothing prevents customers like Blumenthal from selling their Teslas and buying other EVs that are untainted by Musk's hate-drenched Twitter. And with Tesla's relatively high prices and the pain of near-record inflation, consumers are happy to buy their EVs from other vendors. There's one key problem with this narrative, and I'll get to that in a minute. Forbes goes on. While consumers who purchase internal combustion engine-powered vehicles care about price, make, and model, EV buyers care most about how long it will take for them to take delivery of an EV. This has mattered over the last few years due to EV supply shortages. Now there are more EV models available, 53 models now or soon to be on the market, according to the Wall Street Journal. On average, S&P Global Mobility has found that about half the people who own a certain vehicle brand return to buy another one, meaning the other half switch to another vendor. EV buyers in the last year or more are likely to have traded in from another brand. Here are 3 examples reported by the journal. Kia. About 80% of Kia's EV6 electric crossovers buyers traded in something other than a Kia, compared to 61% for all of its models. Now, the problem with Kia is their vehicles no longer qualify for the tax credit. The big problem with this is, like I said, Kia's sales of their EVs have actually declined since the changes to the IRA tax rules. In fact, it appears to me as though it's not really that likely that Kia is going to be supplying a massive number of EVs to the market in the US. Now, their numbers could stay about steady. They may increase a small percentage or so, but it won't be enough, I don't think, to affect Tesla's sales realistically. 2, Ford, they say. Over 66% of Ford Mustang Mach-E electric sport utility buyers had non-Ford trade-ins, compared with Ford's 42% brand-wide average. So apparently Ford will destroy Tesla sales. Rivian. The startup truck maker's customers are equally likely to come from owners of a $30,000 Subaru Outback station wagon as a $100,000 Porsche 911 sports car. Now, Rivian's production numbers are, well, they're pretty minuscule. I can't see that production drastically changing in 2023. As much as I love Rivian vehicles, and I love the company, it's very unlikely they're going to have a significant impact on Tesla sales in the year because, frankly, the Model Y and the Model 3, they're completely different vehicles to Rivian's pickup truck. They don't compete in the same market segment and they're, well, more expensive. Consumers' willingness, say Forbes, to shift brands means that market share is likely to migrate to rivals who can produce and deliver EVs more quickly than Tesla and other EV incumbents. Now, I'm asking Forbes, I'm curious, who are those manufacturers? How many EVs will they actually produce in 2023? Seriously, give us some facts, not some emotion. They continue. If customers are happy with their purchases from Kia, Ford, and Rivian and the like, they may shun Tesla and buy from rivals in the future. The next reason for Tesla's collapse in stock price in 2023 is that Tesla's big discounts hint at softening demand. Tesla had set a goal of 50% growth in the number of vehicles it shipped in 2022. In October, Tesla lowered its target. Tesla has long been the high-priced spread. Therefore, the discounts it announced in late December strike me as a sign that demand for its vehicles is falling short of its expectations. Both new Tesla buyers and existing Tesla owners are the recipients of these discounts. According to Car and Driver, Tesla is offering current owners a 30-day trial of some enhanced autopilot features, which are usually a paid upgrade. Tesla is also offering Model 3 and Model Y buyers various discounts, including $7,500 if they bought in December, along with 10,000 miles of free supercharging. In addition, plant shutdowns could make it more difficult for Tesla to meet its shipment goals. For example, on December the 24th, Tesla closed down its Shanghai plant, which shut down earlier in 2022 due to surging COVID-19 infections. The plant, which produces 40% of Tesla vehicles, is scheduled to reopen on the 2nd of January, according to the Wall Street Journal. It remains to be seen whether the discounts will increase demand enough to exceed Tesla's original growth goal, or whether the Shanghai plant shutdown will leave the company short of that goal. Now, obviously, in those claims, there wasn't any facts. It was just emotion and thoughts and opinions. If we look at Europe, for example, Tesla is the number one vehicle seller in Europe for EVs for the entire year. It's not even close. The Model Y is the most popular EV in Europe for the year, and there have been no discounts on those cars at all. Demand in Europe is incredibly strong. In China, Tesla sales are actually up massively compared to the previous year. So yes, it is possible Tesla is seeing a small reduction in demand, but yet, if we look at the actual sales figures that Tesla continues to provide us, or we continue to see in October, in November, and so far even in December, where Tesla is, for the first 3 European countries that have reported sales for December, it's actually just come out within the last few hours, the best-selling manufacturer in those 3 countries, Spain, the Netherlands, and Norway. It would appear as though the statistics don't agree with the narrative coming from Forbes. I think the key reason why Tesla's sales were, it appeared as though they needed to discount their cars in the United States in December was because buyers were waiting for January. As you would. Why would you not wait a few weeks simply to get a $7,500 discount? That's enough money to wait. And Tesla was thinking, why make them wait? We can get them to buy now. Honestly, that to me is not a signal that Tesla's demand will decrease. If anything, Tesla's demand will likely increase. Their production capacity in the US will go up as a result of manufacturing more vehicles at the factory in Texas. And the fact that there will now be a $7,500 discount for all their cars rather than the reverse. Remember 2022, that discount applied to its competitors, but not for Tesla? Well, the inverse will happen now. That discount will apply to most Tesla vehicles, and it won't apply for many of its competitors. If anything, those facts, not those opinions, will increase Tesla's sales in the following 12 months. I think you would have to agree with that. If you don't, let me know why. So Forbes continues saying Tesla stock is way overvalued even now, and that's why its stock will collapse. The idea of betting that Tesla stock is overvalued has been around for a long time, and for many years. It was a money-losing wager. For example, 7 years ago, I wrote about Mark Spiegel, founder of 9 million assets under management, hedge fund Stanfield Capital Partners, who was betting on a decline in Tesla's stock price. His short didn't work out. Since then, Tesla stock has increased over tenfold from $12 to $123. This thing had the most massive margin for error of any short I ever put on. And then it went up 25 times, Spiegel told New York Magazine in August 2022. In the last 7 years, Tesla has reversed the billions in negative cash flow that it generated in 2016, producing $9 billion in free cash flow during the year ending September 2022. Nevertheless, despite a relatively small top line, Tesla's price-earnings ratio of 36 is high compared to that of its 4 rivals. Specifically, Tesla's $75 billion worth of trailing 12-month sales is 9% of the $825.6 billion generated during that period by Toyota, $260 billion, GM $147 billion, Ford $152 billion, and Volkswagen $267 billion combined. On the basis of trailing forward growth, Tesla seems way overvalued. Those larger companies have much lower trailing PE ratios, 10.1, 5.7, 5.2, and 4.6 respectively. Tesla shares traded at price to earnings of more than 24 times 2023 estimated earnings, many times higher than GM and Ford, which trade between 5 and 6. Now, Forbes says some of that excess valuation may be due to Tesla's high growth expectations. In 2023, analysts expect GM and Ford to grow in the low single digits, way below Tesla's 36% projected growth. Tesla grew more rapidly and was more profitable than its peers. For example, in the September ending quarter, Tesla's revenue rose 56% and its net profit margin was 15.3%, industry leading. This compares favorably to rivals Toyota, revenue growth of 20% after a bad quarter before that, and 4.7% net margin. The key figure there is Toyota's 4.7% versus Tesla's 15.3%. That means Tesla made more than 3 times as much profit per car in that quarter. GM 56% and 7.9%, Ford 10% and minus 2.1%, and Volkswagen 24.2% and 2.9%. Those companies, though, have enormous amounts of debt. Tesla has none, and it has a lot of cash on hand. the only cars Tesla manufactures are electric cars. Its rivals only make 5%. Only 5% of their current production are EVs. It's going to be hard to change that. It doesn't happen in the way the media believes. They keep saying it's going to happen overnight. They keep saying this stuff over and over and over. They made these same comments back in 2019. And yet, here we are today. And production of EVs by Tesla's rivals, the big legacy automakers, is still relatively very low. Forbes goes on. Tesla's stock market capitalization, $389 billion, is $2 billion higher than that of all four of these rivals combined, $387 billion. Here is the December 30 market cap of Toyota, $220 billion. Remember, Toyota has $186 billion in debt. GM, $48 billion, Ford, $47 billion, and Volkswagen, $73 billion. Despite the 70% fall in Tesla's shares since it peaked in November 2021, the stock still seems massively overvalued to Forbes. Exactly how much Tesla's stock should be worth is a matter of what assumptions you use, but Forbes believe Tesla's stock is only worth $50. There are many opinions about how much Tesla stock should be worth, they say. However, cases can be made that its shares are worth anywhere from $251 all the way down to only $30. For example, one analyst assumed that a fair market cap for Tesla is $94 billion or $30 a share. How so? According to Nicholas Kolas of Data Trek Research, Tesla's market cap should equal the combined market cap of GM and Ford, according to a December 28 report in Investors Business Daily. Sheldon Lieber, CEO and Chief Investment Officer of Chasing Value Asset Management, chasing value as in value is what they perceive to be the most important factor, not growth, thinks Tesla will trade below 100 in January 2024, as he said in December. For the past year, we have been short Tesla, purchasing puts with $133 strike for January 2024. It is our only short position and has worked out so far. I now believe we could see the stock drop below 100 by that time. Many others have played the same game. Many others have lost billions of dollars. That's a very dangerous and risky proposition. In October, Tesla lowered its forecast for 50% growth in unit sales, setting a goal of shipping 429,000 vehicles in the fourth quarter of 2022. Some analysts are more pessimistic. Wedbush Securities estimated deliveries in the 410,000 to 415,000 range, while Baird forecasts 387,000 for the quarter. If Tesla exceeds the consensus estimate and raises its growth forecast, those betting on a further decline of its stock will lose out. The beneficiaries of such an upside surprise could include individual investors who have purchased a net $16 billion of Tesla stock this year, according to data from Vanda Research. In fact, many institutional investors and many retail investors in South Korea are buying Tesla stock now at an incredible pace. Buyers of Tesla stock recently include Cathie Wood and also Zachary Kirkhorn, Tesla's CFO. He believes stock has hit the bottom. Now, Forbes says the bargain hunters buying Tesla stock right now will suffer if Musk violates his December 2022 pledge not to sell more Tesla shares until 2024, and Tesla reports fewer shipments than expected and lowers its forecast. But like I said, Forbes believes Tesla stock is going to collapse and hit $50. I believe, well, you know what I believe, the complete opposite. I believe Tesla is about to disrupt the semi-truck market. I believe Tesla is going to continue to disrupt gasoline sales in the United States, in Europe, in China, in Australia, in New Zealand next year. And I don't see any automotive legacy companies massively ramping up EV production in 2023. That may happen in 2024. 2023 is not the year. What do you think? What are your thoughts? Let me know in the comment section below. Thank you for watching. Bye-bye.